Welcome to the video. We're going to be talking about probably the two most requested questions, I guess, that I get. We're going to be talking about risk management, something I talk about in every single stream. I'm going to be showing you guys how to really use risk management just so I can refer people to this video, but also just a great thing to know for anybody who's new to the channel and stuff. Welcome to the free trading movement. Aside from that, I'm also going to be showing you how to set up your TradingView. TradingView is basically this free platform. They also have paid plans. Where you can chart and use technical analysis. It's the best platform in my opinion. But yeah, I'm really excited to show you guys how you can really use technical analysis and risk management in order to maximize your profits on trades and to minimize your losses. So before we get into how to set everything up, I just want to show you the different plans TradingView has. And they also have a free month trial for their highest plan, which is like $60 a month usually, just if you want to try it out and stuff. So let's go take a look at that and what you're really getting from this program. Alright, so as you can see, they have 4 different plans. Basic, which is free. You pretty much just get what you need if you're like, not using it multiple hours a day. If you're just using it casually and stuff like that, basic, just go for it. You know what I'm saying? At least try it out. Of course, you have the free monthly trial. You get pretty much, I think, 3 technical indicators, and I think you get 1 alarm. So that's the only thing. You can get price alerts if you have better plans. You can get 10 alerts if you have the Pro plan, you can get 30 alerts if you have the Pro Plus, and you can get 400 if you have the Premium plan. So they have 25 indicators on the Premium plan as well. You can have 8 charts on like one screen. So there's a bunch of different things per plan. You can, check it out yourself, see what's the best for you. And yeah, if you just want to try any of them out, there's currently a free 30-day trial. The link for TradingView is in the description. Alright, so now we're on TradingView. The first thing you want to do is set everything up. I'm just going to be showing you what indicators I use, how to set alarms and stuff like that. So just first off, if you want to set an alarm, you just right click anywhere and then you put add alert. Then you hit the create button, and whenever it gets to that price, it will give you an alert. You can also put an alert on a trend line. Let's say it's breaking out of something. You just create a trend line, hit that alert button, and create it. This is extremely useful just because then you don't have to be staring at charts all day. You can just set your alert, and if something happens, you'll get a notification on your phone, or if you're on your desktop, it'll pop up on your screen. But if you want to set up indicators, these are the ones I use. The 200-day moving average is mainly for longer term stuff. The MACD and the RSI can be used pretty much on any time frame. Those are your oscillators. The volume, always use volume, super useful. And then VWAP is more for intraday stuff. If you're more of like a day trader, you're looking at the 1 hour or under. I would not recommend using the VWAP for anything over the 1 hour. It's just not that reliable for higher time frames, just because it's a very real-time indicator. So you can just click all of that, the 200-day, the MACD, the RSI, your volume, and your VWAP. If you have only 3 different indicators you can use on the free plan, I would just go with your volume, MACD, and the RSI. I think those are necessary based on how I trade. Again, to each their own. Let me just put the VWAP over the MACD. That's just how I prefer it. And I'm going to change my VWAP line to white, which is just also how I prefer it. You can customize pretty much any of the colors, which I think is cool as well. So that's just how you set up the chart. You should know how to use all of this if you've watched my free trading course. If you have not, the link for that will be in the description. And now you're looking at a chart. You're looking for the patterns, which I talked about in the course and stuff like that. You're looking at a company. You're looking at their chart. You get the point here, right? So how are we going to, put on a trade? So I'm going to scroll back. I'm going to be going over how I set up the 40% profit trade that I put out on Tilray. This was about a few weeks ago. I'm going to be showing you really what I was doing before I put that trade out. So I'm looking at the chart. It was right after it had a nice run and then it pulled back down. So the first thing that I saw right here is that there was hidden bullish divergence where you made a higher low on price with a lower level on your MACD. So we're just going to chart that. And while I'm charting everything, you can see which tools I'm using. For example, the trend line, just so you can see the higher low from there to there. That was your trend line right there. We can also chart on the MACD right there just to show the hidden bullish divergence. And you can even like put lines based on the time frame that you're looking at. So if you don't want this line to appear on the daily time frame, you can unselect that. If you just if you right click, go to settings and then visibility. So there's your hidden bullish divergence. Let me just scroll back so you can't see what happened after. So now risk management and stuff like that. Where do you want to enter? Remember, this was like after the stuff. So I'm just trying to do this like as imagine that didn't happen yet, because that's what happened when I put out the trade. So first thing, let's use some Fibonacci, which is right here, Fib retracement. Now we're going to go from this low to the high right here. And as you can see, when it was right here, when I posted the trade, it was at the 78.6% retrace. So we're going to keep that on our chart, just add it to the list. From your swing low to swing high, you retrace 78.6%. That's Fibonacci for you. Hidden bullish divergence. Now what we're going to do is let's create like a support line. Where's their support on this chart? We're going to use the horizontal line just so we don't have to draw like a super long trend line. If we look right over here at about $6.76 or so, maybe a little bit lower, 668, let's go with that. You found support over here, kind of over here as well. And then you use it as resistance here and here. And now this is when I posted the trade right here, is once again back at that line. So now you use your horizontal line to see that. So you have three different things lining up: hidden bullish divergence, your 78.6% retrace, and a support line right here when I posted the trade. So how do you manage your risk on something like this? What is risk management? Basically, whenever you enter a trade, you want to plan out where you want to enter, where you're willing to take your profits, and how much you're willing to risk on the trade. So to set that up, we're going to come right here, click on the long position tool, and let's say the entry is right here at the 78.6% retrace. This is like your risk to reward tool. So you know that you don't want to be messing with this if it falls under the 668 support, but you want to have like a little bit of a comfortable stop just in case it, it wicks under it and then it comes back up, because candle confirmation is what really matters. So you want to have it a few percent under the actual support. Let's put it at 649. That can be your stop loss. So your stop loss is right there. And then how are you going to target Tilray? Well, you know that there's a gap fill right here on the 4 hour. So let's chart that. Your gap to fill is at $9.63. So I'm going to put a green line right there. That would be your gap fill. And that is really where you want to take profit, because now you have hidden bullish divergence, the Fibonacci line and the support, and a gap to fill. So you're going to raise up your target to here, and that would be where you would want to take your profit. Okay, so now we're going to zoom back out. This is very good. You have a 10 reward to risk, which means you're standing to gain 10 more than you're risking on the trade. You want to gain 40%, and you're only risking 4%. That is risk management for you. If you do this time after time after time, even let's say, so you have 10 reward to risk. Technically, if you were using 10 reward to risk on all of your trades, which is very hard to do, usually I go for about a 3 reward to risk. That's like the minimum, but this one was just very, very different. And of course, I'm charting this like after the fact. So when I originally charted it, it was more of like a 4 or 5 reward to risk, but I'm just showing you this right now for an example. So this is what you want to be doing. You know where you want to take your profit, you know where you want to enter, and you know that you don't want to mess with it under this line. You have all the variables in terms of technicals, and your risk is managed. If you keep on doing this, you're going to be gaining a lot more on your winning trades, and you're going to be losing very little on your losing trades. So even if you have more losing trades than your winning trades, you're still going to be profitable because you're making so much on the winners and losing so little on the losers. So that is really how you manage your risk. You want to be doing this on every single trade. You do not want to be market buying something that's up 50% and your reward to risk is a 50-50, because that means even if you win more than half of the time, the other half of the time where you're losing, you're going to be losing a lot of money. So personally, I have about like a 75 to 80% win rate on my trades. Now you combine that with risk management and it really leads to profitable scenarios, which you can see on my trade setups page. I use risk to reward on every single trade I put out. I label how much risk to reward there is. When I put this out originally, I don't remember what exactly it was. It was not 10. I just put that right now because I'm showing the gap fill target. But again, you want to at least have a 3 reward to risk, which would have been like right here. So that's just how you manage your risk in terms of creating that. Of course, you always want to have a stop loss, a few percent under a support. Then some other things in terms of risk management would be, you don't want to be buying companies that are very volatile, like on earnings. You don't want to be doing things that, regardless of the technicals, can just fail. There's certain companies that just don't really respect the technicals. Really what you want to be using technical analysis on, and what technical analysis was made for, was high volume, high market cap stocks, because technical analysis represents the psychology of traders. So this is how you manage your risk in terms of putting on a trade, and then you want to make sure that what you are trading is a good stock and stuff like that, or at least that it's in a hot industry if it's not a good stock. So this was Tilray. It was a 40% trade. The risk was managed. If it failed, you would have only lost 4%, but it happened to work out, which is great. And you had all the different factors lining up. All right, small cut in the video. I just watched it back and I forgot to talk about a few things I wanted to in terms of risk management. The first one is position sizing. You want to be using the same amount of money per trade. Just because you feel that one trade looks better or could move higher than another trade, that doesn't necessarily mean that you should be putting 70% of your portfolio into that trade and only 30% into the other one. You want to be using the same amount of money per trade. Now, why do you want to be doing this? Because when something fails and you have a super big position in it, it's just going to really mess up your flow of trading because you were really optimistic on it and the price just did not go the way you wanted it to, while maybe your other 30% of your portfolio trade did play out and you only made a little bit on it. So you want to be using position sizing. That's just one more thing for risk management. Another thing is market timing. When the market is bullish, that's typically when I put more of my money into it. That's typically when I have more trades going on at the same time, when I'm not really hedging or anything. But you really want to be understanding of how the indexes look, what the news headlines are. You don't want to be, technical analysis does not work the same way when the market conditions are very volatile and stuff. It really works for a stable market. So market timing is also important. And then the third thing is cost averaging. But it works on both sides. If you want to scale into a position, you don't have to put your whole entire, let's say you have $1,000 per trade. You don't want to put your $1,000 bid into the trade at one point. You can cost average into it. So you put, a little bit at the first entry, let's say if we're looking at Tilray, and currently the price is $7. You want to put a little bit of that, maybe $500 in at $7 per share. Then it comes down to $6.90. Then you put another $2.50 in. Then it comes down to the actual support of $6.68. Then you put your final $2.50 in. And then instead of having $1,000 in at $7 per share, you have more of a cost average at like $6.90 or $6.85, something like that. So that's what we want to be doing in terms of scaling in. In terms of scaling out, you don't have to only take profits at one target. If you want to take some profits right here, go for it. If you want to take some profits here, go for it. It just depends on the trade. So you want to be scaling in and out of your positions as well. You don't have to put all your money in for the buy, and then when you're getting out, you don't have to have only one sell order to exit your position. Sometimes you want to take profits on the way up, and then other times maybe you want to take 75% of your profits, but you think that the price might just continue crushing it because maybe you have a catalyst or something. You can leave 25% of your money in the trade for a few more weeks or whatever it is. So those are just 3 things I did not talk about in the video when I was watching it back, and I just wanted to add them in here. Hopefully that helps even more in terms of risk management. So let's get back to what I was talking about before. Just going back on like how you can use TradingView, these are all of your lines. You can also use a parallel channel. Let's say like this. That's your parallel channel. Fibonacci is right here on the second, like on the third drop down list. If you want to draw on your chart or use a rectangle, curves, like let's say if you're looking for just maybe a double bottom, even though there's kind of one bottom right here, a cup and handle, you can use the curve line right there. If you want to add text to your chart, you can click on that. If you want to add an arrow, you can do that as well. Really whatever you want to do. If you want to use harmonics, which are a little bit more advanced, you just hit this and then you create your harmonic, whatever it is. Then this is your long position, this thing right here. If you want to see how much the price moves in a certain place, you can go to your price range. Pretty, straightforward. Just mess with a bunch of different things. And yeah, that's just pretty much how you get around TradingView. You also can have a watch list and stuff like that. You can post charts. It's just a great program. And this is really, this is what you're looking for in terms of risk management. So now you know how to set up your chart. Now you kind of get an idea of what risk management is. So hopefully that was like educational. I don't want to go too far into it. If you want more education on this stuff, just be in my nightly streams. I talk about this type of stuff every single night. And I feel that I did a pretty good job. I don't want to drag it out too much. This is how you use TradingView. I showed you the divergence on the MACD, how to use Fibonacci, support lines with your horizontal line, how to manage your risk. I will admit that this was a little bit overkill. 10 reward to risk is very, very rare. And it's hard to set that up before the price actually takes off. So just keep that in mind. I think when I originally created the trade, it was more like this. The entry was right there. The stop was a little bit lower. And then the initial target, I did have a second target, which was the gap fill. But the initial target was like, I think like right here on this wick right here, because you also had some resistance in that area as well. So that was more of like a 3 to 4 reward to risk. So always you want to be able to gain more based on the technicals and you're risking. Do that time and time again, and you're going to be able to compound a lot of money. Remember, making 10% for 10 days in a row will give you more profit than making 100% just in one day. And if you're trying to go for trades that will yield you 100%, you just automatically have to risk more. So just use as many factors as possible and try and only put on trades that have a limited amount of risk where you know a good place to get out. You want it to be clear of what it needs to hold. You don't want to be like, yeah, maybe you can hold that, but then, maybe you can hold something else in terms of support. No, you want an actual real support based on multiple historical price pivots at that price point. You want to be using this on every single trade. That really is risk management. In terms of like portfolio management, diversification is good. You don't want to be too diversified because that can just hold you back. Personally, I put about 5 trades on at a time. So 20% for each trade, and then leave a little bit of buying power after, just in case you need a cost average or something. So don't only own one stock. Don't be all in, but at the same time, you don't need to hold 40 different stocks in like a swing trading account, unless you're talking like a Roth IRA retirement or something like that. So that's just really what I do on most of my trades. And if you do that time and time again, even if you don't have like a 75% win rate, even if you're only winning half your trades, you can be a profitable trader. And yeah, that's how you use TradingView. That's how you manage your risk. Hopefully that helped. If you have any more questions, you can DM me on Twitter at ChampionVibe. If you want the link to TradingView, it's in the description. And if you want a link to my free course, which pretty much talks about all this type of stuff, divergence, patterns, the psychology of trading, the link for that will also be in the description. Peace out.